Tuesday, August 8th, Stan Ehrlich market analysis. Well. We are actually almost as low as I had been calling for in the last few weeks. Today, we have a new low in the stock market indexes in general, and we are approaching the beginning of the end, so to speak. But first, I want to do a little review here. The S&P 500 started its bear market basically with the other ones at the same time, the very beginning of January of 2022. We had some sell signals that were premature, unfortunately not on the very high of the S&P, but some sell signals that were fantastic on the way down. And of course, the bottom on August 13th, we had a buy signal. Since then, a large head and shoulder bottom formed with a minimum upside objective, and I stress the word minimum, of 476.79, which has been on my charts for months. Now, we've gotten up already to 460 basically, and that's only 16 more points to the minimum huge upside objective on the bear market head and shoulder bottom in the last half of last year. Okay, so we came fairly close, but we banged into this blue area of historical price resistance, and let me reset here, and produced a bearish engulfing a week and a half ago in overbought conditions in a resistance area. Great combination for hopefully a good signal. For 3 days, what a pain. It did rally a little bit more for a little longer than I would have liked, but then it gapped down 5 days ago, leaving a gap behind. You know what I think about gaps? They're like a black hole in space. They tend to suck the price action back into the gap. So I'm going to go back up and close that gap in a week or two. It might even be a little earlier than that. But look at this. Today's low is now approaching the gap closure I liked and wanted to get closed, expected to get closed way back in, I don't know, when it gapped up. I probably said the same thing July 13th, about a month ago. So what I'm thinking, we're going to come down. We're going to bang into maybe 444 and a few ticks, which is not quite the gap closure, but it is the beginning of support. Excuse me, 2 previous tops that we had back in June and around the end of June. So there's a chance that it could bounce off of that 444 pretty much exactly. But the gap is closed when it gets down to 443, another full point. And that is definitely a damn good possibility. It won't interfere with anything else. So that's my best shot. 443 flat. Now, below that, you've got more support, and you are in the ballpark of a major bull trend line. And that would be the ballpark of 439 and give or take a point or two, depending upon what day we get there. And so, excuse me, something there. So I have no problem with that happening. I've just got to try to figure out if it turns up sooner. There is a chance that we could get all the way down to 432. I kind of doubt that. So that my best zone is 438 to, I'm going to say 443, about a 5-point area. Enough of the S&P. My commentary in the DIA is extremely similar, but look what we've just done now. We closed that gap. It came down, closed the gap earlier this morning, turned around, and is now more than halfway back up in today's range. Now, granted, it's got a little bit of a problem rallying higher than 351.90 or so, a small area of resistance from the last couple of weeks, but it remains to be seen whether that's really that important. It's also the bottom of the other or the old resistance area, which it did top out in, just the high end of it. with a bearish engulfing the AR sell signal, although it didn't work quite right on the highest high. We made a higher high. Then we got one 2 days ago, and now we're sinking. Great. But the gap is filled. That's a toughie. I think we're going to stop about here and go back and go lower than today's lows on the DIA, and probably my first significant support area in a day or two or three for a 345, 346, let's call it, and a little bit under the Qs. We closed the gap in the Qs also. And the first one back up somewhat was the DIA. The spider hasn't done the job yet, and the Qs have done it and the DIA. So we're bouncing back a bit, no surprise. Look how accurately it closed that gap. I love it. It looks like it left a few crumbs on the table, but very small. Today's low so far is 368.82, and the gap would be closed at 368.63. Come on, 1900s. Ticks is still left. Crumbs on the table. Now, coming up a little bit, bounce off resistance, maybe even to there, and then turn down again if it can rally somewhat in the next day or two. I don't think this is over on the way down. I don't think so. We're not that close to oversold. I'd love to see oversold conditions in all three of these in a couple of days with a testing more of the price action support areas, and of course the gaps would all be closed, and by then the S&P would close this gap as well. So I'm calling for something a little closer to 358.5 to be edited, reviewed, changed, etc., etc. Oh my goodness gracious, we have a down gap. We have a gap above the market now on the Russell 2000, which, by the way, has bounced off of some support already quite a bit, and maybe yet today on the way back up. I started my recording today about 10 minutes earlier than normal because I'm pretty excited about the developments that are happening. So a little bit of strength would close that gap right now in the Russell. And I just said I'm allowing for a little bit of a bounce in everything else for the moment. That looks like things could fit. And then everything slips back down again. That could all happen yet today, or it may take a day or two. But that's my best story. Now, remember, I'm basically bullish as hell long term. And the gaps are closed for the most part, except for the spider. And we could turn at this point. I'm just not quite thinking that's going to happen. But futures, the bonds. Oh my God, look at this. We had 2 days ago a bullish engulfing green ER signal, buy signal, period. Turn the price green, RSI is in the right position. My custom relative strength index, which is what the subgraph is, that's RSI. It doesn't look like it, but that's the way I like it. And now I want to rally in the next week. Why? Because this cycle, which has been extremely good, produces a potential rally high approximately, or maybe exactly, on August 17th. I believe that's next Wednesday. So we got a week and a day, and we're rallying pretty nicely already today. It's up a little over a point at the moment on the upper 2/3 of the range of the day, and starting to bump against a little bit of resistance, some previous lows of importance, and my little previous support level, which didn't hold very well. And I think we're going to get above that little red zone here real quickly and start to get into 124 and higher. I really want next Wednesday the market to be at 129 and close to being, or maybe being overbought, and we'll see the cycle high maybe start to kick in. Excuse me. Now remember, this is, in my opinion, a major long-term bottom forming. This might have been 2 days ago the last big opportunity to get it below 120. I can't tell you that yet. It just looks good. So if I'm right about next Wednesday's rally high in the bonds and it turns down a little, I don't expect it to last long. I don't expect it to come down very far at all. And I do expect it to continue to basically rally up for a longer term move. And this could have been a broad double bottom formation, which we don't see clearly yet because not enough rally and or time has passed. Major bullish breakout long term when we get above 134. Let's go to a variety of others. I got some real good ones here. I just talked about the bonds, so we'll go to the 10-year notes. Unfortunately, we didn't get a dip down. Oh, I am sorry. Back it up. Bonds. One more time. Oh, fiddly poo. Hang on. Yeah, good. The low of the day yesterday in the bonds, and I'm looking at that correctly, was right smack dab at our green bullish ER3 entry price. We bought essentially the low of the day in the bonds to the tick. So now 10-year notes. And I am not happy with this. Okay, here we are. So we missed the ER3 entry on the 10-year notes. Didn't quite come down enough yesterday to get a fill. But remember, our ER1 is always long on the green or red bars. And we are long ER1 overnight. So it's working great so far, both ER3 in bonds and ER1 only in the 10-year notes, but also ER1 overnight's long in the bonds. So that's ER1 and ER3 in bonds. Next. We got a sell signal on the top of the E-mini. I didn't want that. I wanted crude oil. Thank you very much. Things got goofed up a little bit. Our sell signal did not work. We have a small loss on the crude oil a couple of days ago, and today it's acting a little bit stronger than I would have expected. My thought is that it's still trying to top out in this resistance zone. It's really a great one. Plus, we got overbought, and we had a sell signal. Not quite the top so far. So I'm going to stick to my guns and tell you this is probably going to turn right back down again. Getting below today's low would be nice. Getting below the low of the last 6, 7, 8 days would be much better. Next. We already did that just now today on heating oil after a sell signal that also was very close to being a good one. This is not, but super close. So a little bit above resistance in this case, but not necessarily. I could actually get away with this, raising this up somewhat to a little bit higher level. That still works for me. So I did that, and I'm not cheating. This is just what's done sometimes. Okay, actually, I'm going to raise the bottom up here more to correlate with these highs and here and that. Okay, good. So we're in a resistance area, and I'm expecting it to turn down point blank. Next chart, natural gas in resistance. Same kind of thing. I could draw the bottom of a rectangle with the top of it right there and the bottom of it right about there. We're right up against the bottom. You're going to have to imagine it. No, you don't. I'll draw it real quick. And here it is. Okay, so resistance and a significant amount of it too, right smack where we are. Not quite overbought though, so maybe another day or two, a little bit higher. Next, and then turn down. Gold, almost making new lows for many months. I do expect that to happen. We had a sell signal on the very high day of that last rally. Great. We also had a buy signal at the bottom of a double bottom way back in February and a sell signal before that was the top of the rally. Next chart. Silver, even better. Buy signal at the bottom of the break, sell signal at the top of the rally, and the second one at the top of the double top formation with a little complementary a couple of days later and then crash. Buy signal at the bottom of the break. Unfortunately, not a sell signal in that or buy here, but recently another couple of sell signals, and we are in new low ground today for the last couple of weeks since those sell signals. Now we're oversold and we're approaching previous lows back in June. Support. it's going to bounce. At the most, I think back up to 24, probably in the ballpark of 23 to 24. And that's not a heck of a lot, frankly. But I think it's about to bounce. Next chart, platinum, oversold, at support, same story. It's going to bounce. Next, high-grade copper, sell signal on the top of the rally to the exact day. New low since then today. Coming close to support. Not quite oversold, maybe a little more elbow room on the downside, basically bearish. Next, soybeans, we did get a great sell signal almost on the exact high day, another one after that, and now we have tested the support area yesterday and today, and we are seeing a little bit of strength. We're oversold yesterday and today in support, a couple of my favorites. I'm not getting a buy signal yet or a green bullish engulfing ER signal unless we can get above yesterday's high today or within a few days have a bullish engulfing. Then I'll get a green bar. And if it's anywhere around where we are now, I'm going to turn bullish. Next, soybean oil. Trend is down. I wouldn't call it particularly vigorously. And I do see the possibility, it's not going to hide from me, that there's a gigantic head and shoulder, maybe, but I think it's a little premature, but I'll mention it. The shoulder would be April, May, June of 2021. Wow, 2 years ago. The head of the formation is obvious. It's always the highest high, and it should be approximately in the middle of the last important high, which could have been a couple of weeks ago. That does look like it's in the middle, approximately, just eyeballing it, maybe a little bit further distance over here. But if we keep going down, and it's going to be a lot, we have to get down. Well, do you know what this means? It means the minimum downside objective is pretty much ridiculous, but it would be back down to the lows we saw in 2020. Below 10. Next chart. Soybean meal. Not much to say. Look for it to go a little bit lower. Next, we tested support yesterday. We're bouncing off it with a doji so far today in corn. Inside trading range. Looks like it has bottomed a little bit. I don't expect anything quite like it just finished a week and a half ago. I'm thinking if we're going to bounce anything at all, it's going to be probably up to 505. Next, wheat. Same basic kind of comment where it's support. Looks like we got very close to oversold, bouncing a little bit, maybe 690 next, then down. Live cattle, we got a sell signal on the high day. Love it. Also a sell signal on the high of a major rally before that. Love it. Also a sell signal almost on the highest high, but it worked okay before that. And a buy at the most important bottom. We missed by about a day or two. And it went straight up after our buy signal. Right now, yeah, got to be bullish. Not much more of a comment. Don't think there's a lot of downside. I wouldn't be surprised to see new highs real soon. Next, hogs. Pass. Next, OJ. Got a sell signal on the high exact day in OJ. Crashed for 3 days immediately afterwards, bounced for 2 days, and look, we're almost in a new low already. This could have been a huge long-term top, I can't tell yet, in OJ. My first stopping point is not far away now. We're already close to it at 291.18-ish. And below that, the next stopping point on the way down. And I'm expecting it to stop. It's a strong bull market. I'm not seeing anything yet that says huge bear move coming. The next support will be 278, and that's going to correlate maybe with a bull trend line at the same time a week or two from now. Next, cocoa. Oh, my God. Well, I don't think I need to say much. Yesterday, I screamed bloody murder that cocoa was having a gigantic bearish engulfing. and we crashed about 1 full month's worth of high to low in 2 days. We did it in a month. The other way around. A month's worth of rally we wiped out in 2 days. I'm sorry. No wonder that didn't sound right. So we already that fast hit the first area of support at 3,260-ish. So I'm looking probably for the next, and we went from overbought to oversold in 2 days. That is very rare. That's a huge move. Now above the trend line, we're whipping around here at the moment and holding the trend line, although it did get broken. But that low tested support level period, and I didn't even have time to draw that one in. I'll do that later. So I think we're going to bounce, maybe not all the way back up to 3,540, where I'd love to get a short sale off in the next couple of days, but it's a lot to ask. So up some, and then this looks like a very important top. We got to shake off the oversold condition and then start to head to new low ground, I believe. Next, and cotton, sell signal at the top in a resistance area and in overbought conditions. I think it's about to start to make new lows for a couple of weeks very soon. And that is it, ladies and gentlemen. Bonds are still up 1 1/3. You have a great day. See you tomorrow.